Hello again and welcome to another edition of Silver Bullion Television SBTV. I'm your host, Patrick Vieira. Today we have with us Mr. Lior Gantz, who is the founder of the Wealth Research Group, and he's been traveling to over 30 countries in the past decade in the pursuit of thrills and opportunities. Lior has been actively investing in the market since the age of 16 and has a unique perspective on the financial markets and is always on the lookout for new opportunities. Lior loves researching businesses that are off the radar and completely unknown to most financial publications. Lior Gantz, thank you for being here today on Silver Bullion Television. How are you?
Hey, thanks for having me. Doing great. Thanks, Victor.
Sure. Thanks for being here, Lior. First topic, kind of a hot topic. The Petro-Yuan came to life this morning here in Asia. How do you think that's going to affect U.S. markets or more specifically gold and silver this year, along with cryptos?
Well, it's just another layer and another important milestone for the move from west to east. It's one of the biggest themes that we see going forward at Wealth Research Group. In fact, we called it the Asianation of the United States. Basically, the United States right now is in such a problematic financial situation that we see that Asia, or specifically China and India, have the capabilities to become the largest economies in the world in the next 10 years. And with that, they will dictate more terms. One of these earlier terms that they're going to need to dictate is going to be who decides the global reserve currency. Right now, the US dollar is the global reserve currency by default. No one wants it to be that way, but there is no other alternative. 71% of the world's currency is US dollars. So 7 out of every 10 currency units in the world are US dollars. 50% of those are outside the US. And so at this point, there is simply no other alternative. And what all the nations of the world or basically what the leading nations of the world are trying to create, is a situation where there's going to be continuity once the US dollar stops becoming the world's reserve currency. But they can't just say, hey, let's reconvene, let's do a G7 meeting or a G20 meeting and decide that another currency will be the world's reserve currency. No other currency is suitable right now in terms of how it's going to impact the market. So nobody wants to rattle the cage. Nobody wants to be responsible for creating panic around the world. And therefore, there's just measures being taken to gradually leave the US dollar behind and move into a new kind of monetary system in terms of how governments and central banks want the world to transact. Obviously, cryptocurrencies are revolutionizing some of this aspect, and they might be more integrated in this in the future, and precious metals could be integrated in the future in some sort of fashion, because we haven't never been on a global fiat monetary system for any lengthy period of time like this one that's going on for 47 years. So in terms of what this will do, this is just another confirmation that there's a gradual move from west to east in terms of power, in terms of political structure, political dominance, and just financial dominance. Remember, the U.S. in terms of demographics is less than 5% of the population of the world, right, but it still has the biggest economy on the planet right now. So as soon as China and India become more robust, and it's happening like every day, their middle classes are becoming bigger. They have their own problems, sure, but their demographics are far more interesting than the U.S. demographics. Remember, what made the U.S. an empire is the fact that they were left untouched by World War II, and they were basically the industrial hub of the world, but they're not anymore. And it's important to understand that. So what I see going forward is not only international investors and U.S. investors looking at the Chinese stock market as one of their major avenues for investment, but I see money coming in from Asia and making acquisitions and mergers of U.S. companies. Remember, the U.S. incorporated companies like Apple, Amazon, Microsoft, etc. They're the biggest in the world. But if the money is going to be where Asia is, then Asian buyers, Asian investors will be the major stakeholders and shareholders in U.S. companies. They're going to buy U.S. companies. They're going to buy U.S. real estate. And sure enough, in 20 to 30 years, you're going to see a lot of Asians behind the best U.S. companies in the world in terms of ownership, in terms of majority ownership. The Petro-Yuan contracts are just another layer of how China is trying to move money away from the necessity of transacting in dollars and just having a direct payment in the yuan going forward. And that's why they're obviously making sure that they back their currency with more precious metals and just making sure that the world is open to the yuan. Remember that the government in China intervenes in the stock market and intervenes in their currency markets in a much more obvious manner than in the U.S. In the U.S., they do it very passively. They don't announce what they do. They do it with their black accounts. And in China, it's much more common for them to say, "Hey, we just did this," or "We just did that," because the government is much more powerful in terms of their relationship with the people of China. So, this has already been announced. This has already been done. The fact that it started now is very interesting to see how investors will accept it. But the major theme right now is what will happen with interest rates in the United States. That's very important for 2018, 2019, and beyond.
Right. If those interest rates do continue to rise, how do you think it's going to affect? Excuse me. How do you think it's going to affect the average homeowner who seems to have done a repeat of 2008, where they went and remortgaged their house or refinanced their house, and now they're holding a pretty hefty mortgage once again?
Well, honestly, I think that the real estate market in the United States will do just fine. Homeowners will suffer from high mortgage payments, but they see their tax cuts and they see their wages rise right now in America. So the pain of large monthly payments, it's going to be problematic, but it's not going to create a wave of defaults. Usually, people like to take out mortgages when banks are more flexible, and banks are more flexible when interest rates are rising. So it's counterproductive, right? People should have taken out new mortgages when the rates were much more affordable, but usually rates being affordable means that their credit needs to be much higher. And in the U.S., there's a problem with credit scores right now. So the banks will become more lenient because they're getting higher interest rates. And I think the overall prices for real estate in America are not going to go down substantially, especially in an environment where their demographics are becoming younger. So the baby boomers are retiring. There's about 51 million people retired right now. It's going to be about 80 million people by the end of 2030, 2035. And that's going to peak right there. But on the flip side, millennials are hitting their peak earning years in the next 5 to 6 years. They will want to move into homes, to home ownership instead of renting, because the neighborhoods where you rent are not the best school districts. They're going to want to move their families into the better school districts, and they're going to want to get their first home, the American dream. Remember that when people buy homes, they don't make that as an investment decision. They make that as an emotional decision of, hey, I want to live a better life, and they're willing to pay the cost. So between now and 2050, America is going to grow from 320 million people to about 400 million people. And there's a shortage of houses just because in the last 8 years, home builders have not built an excess inventory. And so overall, home ownership has bottomed about a year and a half ago at about 60%, and it's trending higher. What I see going forward is a problem where banks are not going to be able to lend to a lot of the millennials because they have not established the right credit history, the right debt to income ratios, etc. And there's going to be a new niche in terms of real estate of how people get into these houses. On one end, you're going to see people that want a new home, they have steady incomes, they have some cash to put for a down payment, but when they go to the bank for a traditional loan, they're not going to be able to pre-qualify. On the flip side, you're going to see sellers who have bought homes in the last year or two for very high prices, and they're going to have to refinance those debts, and the pain of their monthly payment is going to be too big for them. But on the flip side, they can't take a large discount for the house because their mortgage due, their balance is still very high. So there's going to need to be some sort of a mediating event for these two market forces. These buyers that can't qualify for a loan, but they do have the money to put for a down payment and do have the money to pay for a monthly mortgage payment. On the flip side, these people that feel the mortgage pain but can't take a discount. And I wrote about this extensively on this strategy that you can create a win-win situation in the middle, make about $5,000 to $6,000 per deal that you do, and you can even do like 3 or 4 deals a month, because these deals take like 4 or 5 hours to create, and it's called the lease option strategy. And you can go to wealthresearchgroup.com/niche, like NICHE, and read all about how these transactions can happen. Any market in America is good for them. Doesn't matter where you reside, and it's very remotely done. You don't need an office. It's a home-based strategy that I've been using myself on how to facilitate a transaction between these two. Come in the middle, become a solution provider, and help them help the prospective buyers achieve their homeownership dream, and help the seller who cannot take a discount for his home, and therefore he cannot he cannot compete with other top dollar sellers because their home is new, his home is like, let's say 5-6 years old, so he cannot, the market will not pay him top dollar, and so he's in a bind, they're in a bind, and you can create a solution which they don't even know exists.
Let me ask you about cryptocurrency for a bit.
Sure.
Bitcoin, it's been doing incredible up until, let's say, December of last year. In your opinion, what happened with Bitcoin? Why the drop-off?
Well, first of all, people took profits. People made enormous sums of money.
Right.
And when you make enormous sums, you take profits. It's very simple. It's like with any other it's like with any other sector. There's no difference. If someone bought Bitcoin for $600 or $1,000 and he sees it go up, so fast, so rapidly to $20,000, he's going to take some money off the table. But when a lot of people do that together, that just creates panic, and it just creates a bust cycle, like there was a boom cycle. So that's one thing. So it's very natural. The speed of it is insane just because of the market dynamics for cryptocurrencies. It has no institutional owners that are big government or pension funds or anything like that. So when lots of individuals are putting pressure on the price, it's going to crater real fast. It's just part of the dynamics of this market right now because it's very inefficient. Inefficient doesn't mean it's bad. It just means that price discovery can happen real fast to the upside and to the downside. The second thing is regulations. Regulations were becoming a problem at the end of 2017, and at the beginning of 2018, people start to understand, hey, I'm going to be regulated. This industry is going to be regulated. It might not be what I thought it would be. I thought it would be the Wild Wild West. I thought it would be a good environment for anarchists. I thought it would be totally private, and now I see that governments are coming in. Coinbase, for example, needed to deliver details to governments. All of this sent fear throughout the crypto economy that perhaps this is not going to be a fully decentralized environment, and so people were trying to rethink their positions in Bitcoin and with all the other cryptocurrencies. And I think another thing that really affected this is the problem of scaling. So if cryptocurrencies will not be able to scale, they will be able to scale. It's a matter of time before technology advances them into being able to scale to the levels where it allows very large transactions to happen daily. Like in the Forex market is about a $3 trillion a day market. Cryptocurrencies cannot even be a $3 billion a day market, not 3 trillion. So right now they have a real big scaling problem. The next phase for cryptocurrencies, for them to start flourishing again, and they will, but it's going to take time, because these are technology-driven projects, and we need to wait for them to become to solve their problems. So two of the bigger problems right now are the fact that data on one blockchain cannot speak with data on other blockchain. If I have data on Ethereum and you have data on Bitcoin, they cannot speak. Once the technology becomes available for them to talk with each other, same as in the 80s, Cisco came out with a router. When that happens, that's going to boost liquidity, that's going to boost the amount of players in the market, and that's going to be big. The major event, though, the one that will change this industry forever, is when central banks start owning cryptocurrencies as part of their reserves. When that happens, that's going to change this environment forever. Wall Street's going to come in there. Mainstream investors are going to come in there. It doesn't mean that the price will essentially explode, because if they're able to scale, then the price will actually stay stable. But I do see the altcoins, the smaller coins, the under-the-radar coins, exploding in terms of valuations, like we've seen in 2017. Wealth Research Group, for example, it covered Bitcoin at $400, Ethereum at $12, Monero at $19, Dash at $30, Litecoin at $20. We made insane gains last year by way of becoming early and alerting our subscribers to the free newsletter on these. Steam at 25 cents. So these were big gains. Ripple 27 cents just probably 2 hours before it started moving to $3 on a complete fluke. Bloomberg added Ripple to its terminal like 2 hours after we came out with our alert. So it was a huge alert as well, 1,000% gain, top to, bottom to top. And in 2018, we see other coins as being the main coins that could flourish. We wrote about this at wealthresearchgroup.com/top one, top and the number one, and top four, top and the number four. You can access those reports and see which altcoins we like, and we're going to cover 3 new ones soon in the next 3 weeks here on the newsletter.
Being from the excuse me, being from the precious metals industry, excuse me, we have typically a lot of older people who they tend to stick with precious metals. They don't quite understand cryptocurrency. They don't quite see it as a store of value. Even though the SEC.
Me neither.
You also? Oh, okay.
Yeah.
They don't quite see it as a commodity, even though the SEC has listed it as or classified it as a commodity. So that brings in the argument of gold versus Bitcoin, two very, very strong opinions on it. What do you think the difference is between the two?
Well, I don't see them as competing with each other at all. Gold and silver, or precious metals, they have a track record of thousands of years, accepted everywhere in the world. They have a robust market acceptance, and they are proven as a store of value, and they're very stable over time. Cryptocurrencies are not stores of value. What they are is very advanced and very sophisticated, technologically driven mediums of exchange. That's what they are. They are mediums of exchange. If you try to store value with them, Patrick, you can call anything a store of value. So, for example, you can call real estate a store of value. You can call stocks a store of value. Anything that has value to it and it stores it over time is a store of value. But think to a real estate, a house. In 20 to 30 and 40, 50, 100 years, will that house still be there? So it's probably not going to be there. So it's not a store of value in the same way that gold will be there. It's indestructible, right? It's an element of nature, very unique. And that's why that name, store of value, has been ascribed to it, because it's most likely will be there if you just inherit it, if you give it to your child and he gives it to his child, etc. Over centuries, it will still be there. It's very unique in that way. So the fact of the matter is, cryptocurrencies, they may not be there. And so as a store of value, as an eternal store of value, there's nothing like gold. But my reasoning in life is that I don't want to store value. I want to grow value. I want to become wealthier. And so people that hold too much gold make a mistake. So what I personally do is I have 2 years worth of living expenses stored in physical gold and silver. I take my monthly burn rate, timed it at 24, and I always keep that money instead of fiat currency in gold and silver. If my monthly burn rate goes higher because I'm becoming wealthier, then I just add to my gold position. But I always make sure that I have about 2 years worth of gold and silver physical allocation at all times, and that's enough for me. If there's a problem that is best addressed by owning more gold and silver, then I'll consider owning more gold and silver. If there's going to be runaway inflation or something of that nature, or a currency crisis, etc., and I can anticipate it in the months ahead, because most of these crises, they don't happen overnight. 2008 was a credit crunch, and therefore gold didn't explode out of the gate because it wasn't a currency crisis. It was a credit crunch and actually deflated. And gold had a premium if you really wanted the physical, but the non-physical didn't have a premium at the time. So if you wanted to buy an ETF or something, you didn't have to pay a premium for your gold. Overall, if there's a huge problem around the globe, or just in where you reside, and you need gold ownership, then I'll increase my allocation towards it. But on regular days, like normal times, then I think 2 years worth of living expenses is more than enough, is more than what you need. It's fine. Gold has performed very well, but if you own gold, you're not going to want to realize those capital gains anyway. Though you're not going to want to sell your gold. Why sell it if you understand that there's a problem? So if you think there's a problem today, why sell your gold today? If you think there's a problem tomorrow, why sell it tomorrow? So essentially, gold ownership is something you never want to use. You want to keep owning it, because if you ever need it, really, it's not going to be to realize gains. It's going to be to live, to sustain yourself. So if you want to trade gold, and you think gold is going higher, just buy an ETF, or buy a mining stock, or buy something that is an instrument that tracks gold. But the ownership of gold is for prosperity. You want to own it and never lose sight of it, because if you do, it means that the rest of your life is in a real big problem, because society has decided that, hey, I only accept gold now. I do not accept any other means of exchange, which means, if gold is being accepted in our society, in our modern society, it means that there's a huge problem. So in terms of when you want to use it, it's the worst case scenario, and therefore gold is like an insurance policy. You don't want to exercise it. You want to have it, and it does cost you storage fees and whatnot. But the alternative is not to own it and be exposed to to things that happen in our world. It hasn't happened in the U.S., but it's happened in countless countries throughout the 20th century, and it's happening now in the 21st century. Government money is very easy to mismanage, and especially in smaller economies. And so the problem is always there. It always exists. I don't see any reason why not to own gold. So in other words, if the choice is between owning it and not owning it, I don't see why not own gold. And silver is even more speculative because governments and central banks have stopped using it as a monetary reserve. They only use gold now. And so if it ever gets reinstituted as a monetary reserve by governments or by central banks, its price will immediately see a premium. The reason that it's only priced just a few dollars above its production price is because it's mostly used as industrial right now. But if it's what made it rise to about $49 per ounce in 2011 was the insane demand from investors, from individual people. They were able to say, hey, I don't care if it's an industrial metal or not. To me, it's a monetary metal, and I'm willing to pay more for it. And so if it ever wants to rally that way again, it's either going to need more investment demand, or it's going to need governments and central banks to start accumulating it again. So, silver is a very unique metal. It's the word silver in about 74 languages historically is money.
Right.
And so it's the most linked metal to monetary systems that the world has ever seen. And the 16-to-1 classic ratio is not happening because people have stopped looking at silver as a monetary metal. They think of gold as a monetary metal, but for most people around the world, silver doesn't equate to a precious metal right now. It equates to an industrial metal. So that's why it's speculative, and that's why I like to keep some, because I know that the floor is around the production price, and I bought most of my silver at about $14 to $15.
Yeah.
So I'm fine with it as it is. It's a very cheap policy, insurance policy for me. And if it rises, then I know which companies are best in the silver market. One of my closest friends and a guy I consider even a partner is Keith Neumeyer, and he's one of the best silver executives in the world. I am actually meeting with him for 2 days to strategize and get updates on his companies in 4 days. And I think that if silver starts rising again, I'll be a very big buyer of the companies that he founded and that he runs.
Yeah.
Just to give you an example of how I look at the silver market. I don't want to sell my silver, my physical silver. I want to keep owning it, and obviously accumulate more when it's cheap. But if I want the spectacular gains, I'll go with First Majestic, or I'll go with First Mining Gold. I'll go with the companies that Keith Neumeyer is either an active chairman or a CEO, or companies that he backs in a major way. A speculative play would be Silver One, for example, that he's a sizable shareholder in, but he's not part of the management team. But that's something that if the market gets really hot, that's the kind of company that I would become a really big shareholder of.
Right. Keith Neumeyer, he's done a lot of great things with First Majestic.
Oh yeah.
Yeah, he's done incredible things. Getting back to a cryptocurrency, we're at 1,500 or so, somewhere around there, different types of cryptocurrencies. How do we
1,500? Yeah.
15?
Yeah.
How do we know what the top 10? Let's say what should we be looking for that places a cryptocurrency in the top 10 besides something like market cap?
Well, okay, so the market cap is only the end result of the fact that there's demand for that token, for that coin. Bitcoin is by far the best cryptocurrency in terms of its community, because the the infrastructure, the mining equipment, the miners around the world, everything that has to do with the exchanges, all the exchanges. If you see their coupling, they almost force you to buy Bitcoin in order to buy another cryptocurrency. So if you want to get into their exchange, you need to trade your US dollars, for example, for Bitcoin, and then you can change your Bitcoin to Stellar, for example. So most exchanges don't offer a direct exchange from fiat to many of the cryptocurrencies. So it acts as a mediator, and that helps it in terms of its effect. But if you ask the average person on the street, hey, do you know what cryptocurrency is? So he'll say, yeah, Bitcoin is cryptocurrency. So most people don't even know that there's more than one. Well, perhaps it's changing right now, but the point is, it's the dominating one. It's the dominator, and when you want a one-stop shop or an easy-click investment in the cryptocurrencies space, you're going to buy Bitcoin. You're not going to spend a lot of time looking at other ones. Ethereum was the first one to break through in terms of smart contracts, and that's why it has this huge market cap, and it's backed by a lot of Fortune 500 companies, and it's just got a lot of good marketing behind it. In terms of the other coins in the top 10, Litecoin is just a very good competitor to Bitcoin in terms of the fact that it's similar, but if the Bitcoin community is divided, or it's going through these forks, or it's going through these problems with how to scale, then Litecoin immediately shines as a great competitor. So that's why it's in the top 10. Dash is in the top 10 because it's a great privacy coin, as well as Monero at times it enters the top 10 because it's a great privacy coin. So it adds this layer of privacy. If you really want privacy and you don't want anyone to know about your transactions, those are two great coins, and there's two other great coins that are fully private, and we talk about them at the wealthresearchgroup.com/top 4 report that I told you, because I really like a privacy coin myself. And there are the other ones that are in the top 10, like Ripple and Stellar, are incredible projects because they help the banks adapt to everything that's going on. They basically are ways to see the SWIFT system go obsolete and a new system come into play. And so if that happens, these two projects, in my opinion, Stellar can have a better performance going forward because it's much smaller than Ripple. But these two projects are helping banks, and the more banks come in and the more partnerships they receive. For example, Stellar just received a partnership for a few months ago from IBM. So the more Fortune 500 companies join them as backers, as collaborators, they're going to see more and more of their market cap increase. Other coins in the top 10, they just work well because they have a niche that they're trying to meet their needs. There's a community that wants their product, and that's why they're in the top 10. Obviously, there's marketing involved. People need to understand the coin. The development team needs to be able to show that, hey, we're actively working on this project. And what I like about some of these other projects, for example, EOS, is the fact that their software, their platform is easier for developers to join. The language that it speaks is a much more common language than Ethereum's language. In Ethereum, you need to really know the programming, and with EOS, it's much simpler. So, Patrick, these are not cryptocurrencies. The name cryptocurrencies is so misleading. These are just technologically driven projects that are either governed by a decentralized environment or otherwise. You can look at them as if they are businesses. Would you want to own a piece of them as a business? Do you believe in their future? Because none of them pay you any dividends or any cash flow. These are speculations, right? So if you think that their future is better than their present, and that they're priced in a way that their future right now is not better than their present, in other words, they're underpriced in your opinion, then get into them. The best time to get into cryptocurrencies is after a huge smash like we are experiencing. So if you are serious about this is a great time to research them, because all the other people are now disgusted by them. That means that they're underpriced.
Right. Cryptocurrencies and gold. You think it's a good idea to have both of them? I mean, for the average person, is it a good idea to have both?
Yes, and I think that the blockchain will be able to create a situation where gold ownership is much more transparent. You'll be able to see at all times, like you see your stock portfolio, you'll see your gold portfolio, and you'll be able to exchange on the blockchain with other people physical ownership. So it's going to create a situation where these paper derivatives are going to go obsolete. Or in other words, they're going to be priced much lower. There is no reason in the world that JP Morgan and other banks can create a situation where the leverage between their storage and what they're selling you as a product is about 250 to 1. So for every physical ounce, they trade about 250 paper contracts. There is no reason why you should pay for that paper contract the same way as you pay for physical gold. There might be a market for leveraged gold, but it shouldn't be at the regular price. What you should be able to do is trade with other people their physical gold, without any leverage. If you want to leverage it and actually use like a paper contract, you should be able to negotiate, or the market should be able to negotiate with the issuers that this is going to be traded at a 90% discount, because there's a huge chance that if you want to receive your gold, you won't be able to get it. And so all these derivatives will be much more problematic going forward if gold ownership will be on the blockchain, and you'll be able to trade gold, like actual physical gold, on the market every day. That's probably going to create a much more stable gold market, and it's going to help people understand really how much gold is held and where, which government owns it, which central banks own it, what the central banks are doing. Blockchain technology is just going to help make the world much more transparent, and fraud is going to be less of a problem. What I love about this is the fact that it's technology driven. So the technology itself is incorruptible. If any one person had access to decentralized system, then I would say, look, it's the same thing as before. As long as cops have, as long as police officers have access to their own database system, they can tamper with evidence. But if the police was using a decentralized blockchain, then there would be no tampering, because it's just technologically impossible. So it just depends on where the world is going from here. If the masses, the population, will be in favor of decentralizing everything, then governments will have no choice but to decentralize everything, because that's where technology is headed. But if it's not going there, if people get scared and say, no, I want government money, I'd rather have the seal of the United States government on my money than having a fully decentralized environment, then fiat currencies will still be around. I don't know if they're going to be purely fiat, in other words, not backed by anything or backed by something, but it just depends. The people decide in the end what's going to happen. I know many people think, hey, the government is manipulating us, etc. Of course it's manipulating us if we're accepting it. If we're allowing them to manipulate us, then they're manipulating us. That's just the way it is. What you need to do is whatever is under your control. You need to fix your portfolio to be ready for manipulations, because that's how the world works, and you need to make it ready for the future. In fact, I wrote a report on my own portfolio and the way I allocate my own funds at wealthinstitute.com/portfolio. You can actually see how I create my asset allocation model, which does include gold, which does include cryptocurrencies. Yeah,
I might have to sign up for that. Let me move on over into your you constantly seek business opportunities, and I've heard you've found one with an herb, let's say. Could you explain a little bit about that topic? And I believe there's some type of royalty program that comes with it.
Um, well, I'm assuming you're talking about cannabis. In the United States, cannabis is going through a major pivotal change that essentially changes the entire industry. It was illegal in terms of the states and in terms of the federal level for decades, since the 30s, basically, since the 20s. It had many changes in terms of law, but in America right now, it's the sentiment towards it is totally changed. About 75% of doctors, which is around 250,000 doctors, are not only pro cannabis, but have said that they prefer prescribing cannabis, either oils or medicines, in front of big pharma medicine. In terms of the people, most of the people in the United States either approve of medical cannabis or approve of cannabis overall and recreational uses. And many states, almost half the people in America are living in states where it's legal. But on the federal level, they still haven't legalized it yet. The California legalization in January has made it so that the cat is out of the bag in terms of the clock cannot be turned back now. So California is a state that is 39 million inhabitants. It has 250 million visitors a year. The cannabis industry will create major revenues for the state in terms of taxes. Lots of jobs that have been lost for California because people have migrated out of California due to high state taxes. People are deciding to stay because of cannabis. It brings a lot of talent, a lot of entrepreneurship, etc., to the state. And the loophole that we found with Wealth Research Group is the fact that merchant banks or banks at all cannot originate loans or business loans or even bank accounts to cannabis companies because they're afraid of the legal ramifications because they're federally regulated. And so companies that are able to create leverage for cannabis companies, for cash-strapped cannabis companies in the form of loans or in the form of other funding, they have a huge advantage because their competition is very scarce. And so what we have looked at is what royalty company, and we like the royalty model because in the gold sector, royalty companies have outperformed both the spot price and the miners, the developers, the explorers overall, all the ETFs, any managed fund. The royalty companies have just been exceptional. And I wrote about this at wealthresearchgroup.com/royalty. And you can check out that special report right there. It includes a number of royalty companies, which I believe are all expensive at the moment, but it's worth waiting for their next dip to take a look if you want to take a long-term position, because these companies, they're not cyclical like the gold sector itself. They are able to generate steady cash flows and are growing no matter what happens with the price, with the spot price. It's quite unique. Anyways, going back to cannabis, we tried to find a company that acts as a merchant bank. And what we saw is that the royalty model is perfect because these companies make, as you know, Patrick, they make upfront payments. And then they essentially, in exchange for that, they don't want to get us an interest payment back. They don't want to get any type of their loan back. Instead, they want a royalty check every month from future profits for the company that they made the upfront payment to. So essentially how it works is, for example, if a royalty company, let's take an example of a California one that was just recently went public. It's called Fincana Capital Corp. It's a Canadian company, but it's incorporated in Canada. Its market is California cannabis, and they created a royalty deal, for example, with a company called CDI, and then CDI gets an upfront payment. Once their profits start to kick in, revenue goes into Fincana Capital. How? In an agreement set together for a royalty payment. Now that royalty payment has a duration for the life of the company. So that creates like very, very steady royalty streams, and they can just repeat that again and again, and then they de-risk any particular one. So anyone that dries out or if the business suffers, then the royalty payment is obviously, it stays steady. But if that company, for example, goes bankrupt, they can foreclose on it. They can take all their assets, and everything that has been paid thus far is already pocketed. So the amazing thing about the royalty model is they can keep creating new royalty streams all the time with the best-in-class companies. And if ever something happens, they default, they take their assets, they seize their entire business. So it's just an amazing model because it creates such a steady cash flow with no overhead. These companies, the royalty companies, have between 10 to 15 employees, and they can generate billions in revenue. It's a financial magic. In fact, Warren Buffett said it's like building a road once. You pay for the asphalt once, and then you put a toll booth and you just charge for the traffic forever. So if you know how to maintain a road, which is pretty easy, right? Then you can have that toll booth there forever. That's why royalty companies have done very, very, very well. But in the case of Fincana, I like that it's a new company. They just started trading, so they're very unknown. And their royalty streams haven't started kicking in. They're going to kick in starting in the summer. And so I think they're going to receive much more attention. You can go to the Wealth Research Group site, wealthresearchgroup.com/cannabis. And I created a special report, a PDF file with 91 days worth of my own research, including my conversation with the CEO. So you can download that and check out more. If you understand the cannabis sector, if you understand the fundamentals, and if you're ready to take a look at a very risky speculative company. Obviously, it's a very small company. It's not a Johnson & Johnson or anything like that.
If you don't mind, I'd like to ask you, what's on the radar for yourself or for the Wealth Research Group in terms of investments in 2018?
Well, I think that the major indices, the Dow, the Nasdaq, and the S&P 500 still have about a 50% upside, 50 to 80% upside from here. I think we're in a part of the cycle where the tax cuts have helped companies' PE ratios become much more attractive. And so think of the tax cuts as taking the stock market back to 2015. So we do have a lot of room to go higher. I don't see a lot of companies that are cheap, and therefore I'm very selective with my investments. In my opinion, there's only about 10 companies in the world right now that are listed on the major indices that I would consider owning. They're called wealth stocks, and we write about them frequently on the newsletter. These are my long-term investments, the ones that I want to keep for decades on end and reinvest the dividends back into additional shares and just compound. And this has always been the core part of my portfolio since I was 16. I think that in terms of the stock market, when rates continue to rise, they're going to rise to a point where the 5-year bond will yield more than the S&P 500 dividend yield. At that point, I think that the market will start to top. So you need to look at that ratio between the 5-year bond and the dividend yield of the S&P 500. The 2-year bond is already yielding more than the S&P 500. So that's why in 2018 the market is down. It's a matter of where can I get more yield, in a short-term treasury or in the S&P 500. That's how pension funds think. That's how institutional money thinks. That's how central banks are balancing between raising rates and the stock market, because they don't want to create, obviously, a crash for the stock market, and they don't want to, on the flip side, let inflation run from them. So right now inflation is quite tamed. In the big economies in Europe, it's very tamed, and in the United States, it's quite tamed. But they need to keep raising rates because people's wages are on the rise, and in an economy where you only save around 2 to 3% of your money, that's how U.S. Citizens live. They spend everything. Then when their wages rise and their taxes get trimmed, they're going to spend more. That's going to create velocity of money, and we haven't seen a large velocity of money in the U.S. since the 70s. So they obviously don't want that to repeat. So they will keep raising rates. When I think the market will change and the commodities market will start being much more favorable than right now is when the Fed will raise 50 basis points instead of 25 at one time. That will signal to the market that they think that inflation is becoming a real problem, a huge problem, and that's going to trigger gold going higher. That's going to trigger commodities going higher, and that's going to create a situation like we saw in 2016 where mining shares were absolutely the best performing sector on the planet. I don't see it happening yet, though. So right now it's time to dollar cost average your best stocks, the stocks that you feel will do best when the market starts to go higher. Like I said, I'm a huge fan of Keith Neumeyer. I think that these types of companies that are well managed with people that have done this before will do it again. If you want me to tell you about other companies that that I feel have an enormous chance to be incredible winners, I can tell you about 2 or 3 other companies that Wealth Research Group is currently researching heavily.
Yeah, I think our viewers would love that, but you know what? Let's make them wait for another day or visit your website to find out.
Sure. Yeah, definitely.
Lior Gantz, we thank you for your time, the insights, the information that you've given us. It's absolutely been incredible. One more time, how can our viewers find you?
Best to go to wealthresearchgroup.com and sign up for the newsletter. If you want if you want 2 or 3 updates a week on what's going on in the economy, the way that I see it. And look, Wealth Research Group is just my way of sharing the research that I do personally. So whenever I find an incredible opportunity, we actually alert and cover it on the newsletter. So we're not only a newsletter that covers the economy in general, but we're also a newsletter that is very specific to opportunities in the commodities sector, in the cannabis sector, in the cryptocurrency or blockchain sector. So we actually covered 2 companies that are publicly traded companies that have found ways to monetize blockchain technology. So if you don't want to own a cryptocurrency, you can own a company that profits from either mining cryptocurrencies or from creating partnerships on the blockchain. So that's very exciting for us, and we think that that's a huge opportunity because it's a bridge for retail investors who don't have exchange accounts, but they do have regular brokerage accounts to get exposure to the blockchain market. So we also covered that, and obviously my core values are these wealth stocks, the companies that have helped Warren Buffett become the wealthiest person on the planet, and we also research them very thoroughly as well, and cover them. So it's just a blend of, it's one newsletter that is a blend of many subjects.
Again, we thank you for your time. We appreciate all your insights, and for the viewers out there, if you want to know those 2 businesses, you're going to have to visit him at his website and see for yourself. So again, thank you for your time, and hope to do this again soon.
Yeah, thanks a lot, Patrick.
Sure, thanks. Thank you also.